Good morning, everyone. This is Dana from NextGen. Today on our Budget 102 series, we are going to discuss replacing a vehicle. This happened to our stay-at-home millennial Carly. I will include background information on Carly and Richard in the card above and the description below. Before they got married in 2010, Richard and Carly had their own vehicles. After about 5 years, Carly's friends would ask her if she was going to replace her car, and Carly's response would be, "I'm going to drive this car until the wheels fall off." Well, right before they went to family reunion in June, an obstruction in the road damaged Carly's tire to the point where it was not drivable and it had to be towed. Because of the cost of repairs exceeded its market value, the insurance company totaled the vehicle. I will explain that process in a minute. When Carly and Richard returned home, they had some decisions to make because they were now down to one vehicle. When Richard and Carly sat down to discuss their options, they weighed their pros and cons to come up with a solution. You may be asking, why is Richard involved when it comes to Carly's vehicle? Once Richard and Carly's auto insurer determined that her car was totaled, it doesn't get repaired or returned to them. Instead, Carly will receive a payment for the actual cash value of the car minus the deductible. Then the insurer takes possession of the car. Their insurance company is essentially buying the damaged car instead of fixing it. If they decide to replace the car, it will be in both of their names. So let's take a look at their options. So what if Richard and Carly decide not to replace the vehicle? Well, they wouldn't have to worry about car payments or maintenance or registration, and their insurance premium would be lower because there would only be one car that would be insured. Now, the downside of that would be that Richard's car is actually over 17 years old, and Richard and Carly would have to coordinate their schedule, and they don't live near public transportation. So they decided to go ahead and purchase a new car. Well, that decision also comes with options. So let's take a look at those. Carly is the COO and CFO of the household, so she presented multiple options based on her research. Now, once Carly selects the car she wants, she could just write a check from their money market account. Now, even though there's more than enough money in their money market account, that account is actually set up as their emergency fund, and Richard and Carly do not consider buying a new car an emergency. Another option is Carly could borrow against their share certificates. This would be considered a secure loan because the borrowed money is secured by the certificate. There's no credit check or proof of income that would be required for this loan. They decided against this because the fixed interest rate that they currently is above 6%, and the repayment period is less than 3 years. Another option is Carly could write a check from their home equity line of credit, or HELOC. Now, the variable interest rate on this secured loan is currently 10%. Richard and Carly decided that they would use the HELOC for their home expenses, but that would be a backup in case anything goes wrong. An unsecured personal loan comes with a higher interest rate, a credit check, and proof of income. The last option for consideration was a car loan. Although car loans are considered secured by the vehicle, the lender is still responsible for ensuring the borrower can repay the loan. Proof of income shows the borrower's ability to pay, and the lender looks at credit reports to assess risk. Richard and Carly's credit unions were offering specials at this time, and their credit scores are actually above 800. Richard and Carly decided they would get their credit union's pre-approval for their new car. And Carly's selecting a vehicle that they will be able to give to their oldest son. So you can see that they have a habit of keeping their vehicles longer than 10 years. And that is how this stay-at-home mom purchased her new car. I hope this information was beneficial. We look forward to sharing additional information with you. Don't forget to like, share, and subscribe to the channel so you don't miss our videos. Talk to you soon.